Hello, welcome to Geojit Spotlight. This video is about the explosive growth in the number of retail investors in India during the last more than 2.5 years. This phenomenal explosive growth is a totally new phenomenon that has not happened at this level in the past. In March 2020, after the market crash triggered by the outbreak of the pandemic COVID-19, large number of retail investors started coming to the market. When the Nifty rose from 7,511 in March 2020 to 18,604, the peak, in October 2021, large number of new investors, dazzled by this phenomenal returns from the market, came to the market. The total demat accounts in India in March 2020 was 4.09 crores. In August this year, the figure crossed 10 crores. Phenomenal explosion in demat accounts. Retail investors entering the capital market, entering the stock market, is a desirable thing. It is good. It has two benefits. One for the economy, second for the retail investors themselves. When the retail investors start investing in stocks, start investing in the IPOs, initial public offerings of companies, what we are witnessing is money flowing from unproductive asset classes like gold into productive asset classes like stocks. This will increase the capital formation in the economy and increase the GDP growth. This is good for our country, good for the economy, good for everyone. The second benefit is, and that is more important for investors, today wealth creation happens through the stock market. Everywhere, that is the trend. That will be the trend in the future also. When retail investors enter the market and start investing in financial securities like stocks, they can participate in the wealth creation that happens through the stock market. In 1978, Sensex was 100. Now it is above 60,000. It has multiplied 600 times, giving a compound annual growth rate of more than 15%. Therefore, this is good. But what is not good is a very unhealthy trend that is happening in the stock markets now. And what is that unhealthy trend? Because of this explosive growth in the number of retail investors, high volatility in stock prices, the rally in the stock market, large number of YouTubers have emerged as trainers. They say we have the capability to train you in stock market trading. Some of them have the competence, I don't deny that, but vast majority of them do not have much competence. They do not know much about the stock market, and as far as the economy is concerned, their knowledge is very, very deplorable, very superficial knowledge. Many of them have only 3 years, 4 years experience in the market. And they have come out with advertisements. Bring 20,000 rupees and make 5 lakhs. That is one advertisement. How I made 50 lakhs in 2 days. A YouTuber advertisement, young guy. How I made 50 lakhs in 2 days. My journey from 10,000 rupees to several crores. The so-called success stories. There are many disasters of total pauperization. There will not be any videos about failures, only about success. So, large number of retail investors, people who are new to the market, who do not know much about the market or the economy, They are actually fooled by these advertisements. They are fooled by these enticements, and they go for a training in trading by paying a big fees. Some of them very small fees. There are people who are training free of charge also. There will be some other hidden costs. I am not going to that. And they are daily trading in the market. It is the experience from the stock market history that vast majority of traders lose money. If you take the last 30 years history in the market, 95% of speculators in the market lose money. 95% lose money in the market. Only 5% make money. This has always been like that. I have observed this phenomenon. Normally when there is a bull market, a large number of retail investors will come at the peak of the bull market and start trading in the market, start buying low-grade stocks, and when the market goes into a sharp correction, it can be crashes, they completely disappear from the market, never to return to the market. This happened in 1992. This happened in 2000. In both these years, we had two major crashes, the Harshad Mehta scam and the crash that followed. The 2000 scam, the tech bubble scam, the tech bubble burst and the crash that followed. 2008 again, another major crash following the global financial crisis. During all these bull runs and retail investor influx into the market, vast majority of the retail investors, traders particularly, traders, speculators and gamblers lost heavily and left the market forever. That is one category. There is another category of retail investors, and that is the healthiest trend in the Indian capital market today. Large number of retail investors are investing sensibly. They are investing through portfolio management services, those who have deep pockets. Others are investing in high quality stocks by taking the right kind of advice from financial experts. And a large number are investing through the mutual fund route. The AUM, assets under management, of Indian mutual fund industry was 30 trillion rupees, 30 lakh crores in 2020. Now, in October 2022, this figure is more than 39.5 trillion rupees, 39.5 lakh crores. That kind of money has come to the market. These investors will make big money. Already they are making money. Perhaps more important is the explosive growth in systematic investment plans. The total money that was coming into the market every month pre-pandemic, before the pandemic, was 8,000 rupees, 8,000 crores rather, 8,000 crores every month before the pandemic. Now it is more than 13,000 crores. 13,000 crores are being invested through mutual funds by millions of retail investors. 13,000 crores every month. If these retail investors stay put in the market, if they continue investing in the market and wait with patience, this group is going to make big money. There is absolutely no doubt about that. As India grows from a $3.2 trillion economy now to an $8 trillion economy by 2032, when India's market cap increases from $3.3 trillion now to around $10 trillion in 10 years by 2032, unprecedented wealth creation is going to happen. Systematic investors, investors investing through mutual funds, through SIPs, and good investors investing in high quality stocks will make a lot of money in the next 10 years. Even beyond that, I'm just taking a small time frame, that's all. They will be laughing all the way to the bank. Whereas the consequences for traders and gamblers in the market For majority of them, the consequences will be very tragic and disastrous. That is the lesson of history. Best wishes.